Tesla has just announced that it is laying off more than 10% of its global workforce, citing duplication of work thanks to their rapid growth in the past couple of years. Now, there were some warning signs that something like this was going to happen. There were rumors that managers were being asked to identify key staff, so I don't think that we're going to see much movement from institutional investors on this news. But it looks like the market overall has still reacted because the stock has dropped almost 5% today after the announcement. And I think that the price drop is likely because, they announced the layoff plans at possibly the worst time they ever could, right after reporting their first quarterly sales decline, at least in a long time. And this means that investors and analysts could be interpreting this layoff announcement as proof of an EV slowdown, and that we should be expecting to see sales further decline from Tesla because of it. Signaling is a very important part of being a public company, and just having this news release after that poor, or the relatively poor, sales report is just not a good look. And the question is are the lower stock prices here to stay? Well, research suggests that typically layoffs are bad for stock prices over the long term, and they can be a drag on business because they hurt morale and productivity, in addition to being quite expensive. And the news doesn't get much better when you zoom out to the industry as a whole, because according to the Car Guru's February intelligence report, they found that new EV pricing fell by about 8.2% since February 2023, noting a whopping 174% increase in availability, or new inventory for new EVs. And they did see used EVs fare a bit better, but 174% increase in available inventory is just crazy. And so what does this mean for Tesla? Well, their TTM PE ratio is about 39 right now, and that's about 69% higher than the EV, auto, and truck manufacturers industry right now at 23. And their PE valuation has been on a downward trend since mid-2023. But one thing that's really interesting to me is their TTM EPS is still looking really steady. It's still showing a solid growth trajectory. If you look at the chart, ever since 2020, it's been on a steady incline. So, fundamentally, the growth is there. And price-wise, analysts are estimating a stock price of $193.31 for this time next year, which is a 13% upside. And this aligns really nice with their projected 2026 EPS of $5.14 a share. And if we multiply that by their current PE ratio, that means we can expect to see a stock price of around $200.46, which is a 17% upside. And Tesla's debt to equity is 0.08, which is great, but given that their valuation is showing lots of downside momentum at the moment, I think we're going to continue to see it drop just a little bit. Maybe not as low as the auto industry average, given that Tesla still has a lot of room to grow, but a 13 to 17% upside 1 to 2 years from now, it just doesn't make sense when you put it up against the valuation risk for Tesla right now. So even though I think Tesla's going to continue to see some good growth in the near and short term to medium term, the market, I think, is just still beginning to realize that it's not going to grow as fast as they thought it would or they hoped it would. And I think that's going to continue to push the valuation down, at least in the short term. So what I would do is I would wait for the stock to consolidate a little further before considering picking up shares, possibly around the 130 mark if it ever gets there, where the PE would be closer to the 30 mark. And overall, even though I think Tesla is a solid company with great growth figures, I just think that the macroeconomic factors are just not on Tesla's side right now. And I think the EV euphoria is going to continue to die down a little bit, which is going to push valuations a little lower in the short term until they become more realistic. So please drop a like if you have any thoughts. Put them down in the comments below. As always, you guys, thanks for watching, and I will see you next video.